5-minute chart. Today we're going to start here, and then we're going to dive deeper into the analysis and what we're going to see going into this session. So today I've come 30 minutes past, 36 minutes actually to be precise, past midnight New York. That is 36 minutes past my time. And we've not yet had that first macro that normally comes into place, and we can see price. We can see what we're looking at. We're looking at bullish prices. So I've already annotated this inefficiency here. I had a limit order here just to expect it to come down here and visit this inefficiency, but obviously you can see it has not done it. So I'm going to delete this limit first of all, and then we're going to get into price. So I came in front of price here and annotated this midnight New York opening price, that's a 7, this price here, and then I annotated this buy side imbalances and efficiency here. So we can directly notice that we did not visit that inefficiency, and then we started trading into that new week opening gap from yesterday's price action. Remember yesterday's price action, we were trading here and we're looking at bullish prices. We are expecting price to run this high and then run higher. I noted that new week opening gap and said it was important, and then I also noted that level there on which we're going to talk about it on the daily chart. So we opened up at 0 GMT here. We ran lower. We ran yesterday's low, and yesterday's low is these relative equal lows here. You can look at this delineation. Those are daily low, daily delineation. This here and this one. We made these relative equal lows from yesterday's session, and as we opened up today at 0 GMT, we ran into these lows. So since then we've been trading higher, and now Asia started back here with the 2 o'clock candlestick. So Asia started here, ran these lows out, this and this one here, and then we started trading higher. We had this inefficiency here. We ran into that inefficiency one time, and then we ran higher, directly higher. We had another one here. We visited here and here, and look at the bodies still inside that inefficiency, and then we had this protraction higher. So what is it reaching for? What was it reaching for? This high here together with the midpoint of that new week opening gap. That is what it was reaching for. So we've opened up here. That is at 7 my time, and then we've had this run higher, a little bit of retracement, and then we've gone higher. We've gone to that high with that week, and then at the same time we're trading at that new week opening gap. So these two levels here are very important. So this buy side here, I'm gonna dim it, so because it has been traded too. So the bias is bullish, and we've already met a target here. So my next area of interest was this high here. This is the session high, that is yesterday 17:15, that's 5:15 my time, but this is the silver bullet, that's the 10:15 in the New York session. So I can expect price to run into that high. We are really bullish, but since we've met this target here, I can expect some retracement first before we start trading higher. So what is the retracement that I'm expecting? So I'm expecting price to start running into this inefficiency. So before it runs this inefficiency here, we can look at price here, and what can we see? At anything that is salient? Well, I'm just going to talk about it. If you're watching this video and you expect to see something, I mean, it's the obvious inefficiencies that we annotate, the obvious ones. I mean, when I came in front of price, this was so obvious. And what else is so obvious here? Anyway, we have this buy side imbalance and efficiency here. It takes time to notice these inefficiencies with the explanation of what are BCs, what are CBs, and then you have to see it. It was wrong. You have to see it a couple of times, and then you'll get used to it with the narrative. and once you see it, you cannot unsee it. So that inefficiency, oh, that's not right. That inefficiency there is in the low of that new weak opening gap. So that low new week opening gap is where we opened up, where we closed on Friday, and you can see the midpoint of that inefficiency is exactly that low of that new week opening gap. So that is important. So if we trade to the low here and then we start trading outside that inefficiency, I'll be expecting it trading to these relatively lows, and then we'll start looking for higher prices. But the way it's behaving like this here, to me it seems like it can either just go a lot more higher, or we can start trading lower and go a lot more lower. So we have these two inefficiencies here to be telling us what's the narrative in price. So again, I've said we've gone above this target here. We can expect it to retrace a little more before starting again to go higher. So the midpoint of that new week opening gap is important in this trading session for this day. So this week we have CPI. I'm actually annotate these lows here. They're not really important. I did not really expect price to start trading into these lows, but I'll point them out when it's important. So for now, let's just look at price here and look at the way we react to these inefficiencies here. And now that we have these relatively lows here, and we never trade into this gap here, so these are sell side, and then there's it's an internal range liquidity pool in form of an inefficiency. So price trades to either two things: an old high or an old low if we're bearish, and it trades into inefficiencies that are above or below price. So in this case, this inefficiency is below price, so it's an internal range liquidity because it's inside this range here, and it's important because we have sell side here, and we can run into these lows here together with this inefficiency. So we have two things going here for narrative. We have that inefficiency here that I just highlighted. I've mentioned why it is important. It's at the low of this new week opening gap, so that is important. And then we have this level here, which is just very open. We never traded into that, and we can reach into that. So the time is 7:44. We are remaining with 1 minute, and then we're gonna start a 5-minute candlestick, and then we're gonna get into 7:50. We're gonna be having that fast macro, and then we're gonna be looking for higher prices around where I had my limit order. So we're trading around 724. So there's 720 level there, and then there's 700 down here. So those two levels are important. If we start trading lower into 700, and then I start seeing characteristics of higher prices, then we'll be looking for a long around that 700 level. So we've had that run into that high here together with the new week opening gap, and then now we are trading low, and we've touched the top of that inefficiency there. So you can see how price reacted here. We had this inefficiency after the close of this candlestick here. Next candlestick opens, and then we have the bodies remain inside that inefficiency, and then we start trading higher on top of that new week opening gap low. That's why we closed up on Friday, and that's why we opened up on Monday, and that is very important. So we had price trade lower, trade outside it, and then a consolidation here, opened up. We had this run into this high here, a little bit of retracement here, then we had this again run into this high. So we've ran that out. We're having that drop here, so we're gonna be watching in the next 4 minutes because it's 7:46, and that fast macro is gonna come into the marketplace. What have we been? We've been bullish, so we might open up with that fast macro, and then it might run into these inefficiencies here to facilitate lower prices. Everybody who's been bullish they do not expect them to be still profitable with this move. They rather take some out here. The people have stops below these lows. People have maybe they're trying to sell on short. If we go below this low here, they're trying to sell it, and maybe some people are protective stops. Maybe they are bullish, and now that price is up here, they moved their stops to right there. So we can expect price to offer lower prices for now in form of the manipulation concept that I talked about even yesterday. You can expect price to run lower, take these stops out, and then start moving higher, and that's what I'm anticipating. If it does not do that here, we can expect price to run higher. If it runs higher and then runs into that high here, that is the session high for yesterday, and that level there is very important. We'll talk about it when I look at the daily chart. If we run through into this high here and maybe run into that level there, that is yesterday it was 807 around 0.71. I remember that level, 807.71. Yes. So if we run into that level here and never running into this inefficiency, then we can expect price to run lower, bank into the new week opening gap here, and maybe run into these inefficiencies. But the best case scenario, I want to see price run lower first, run through this inefficiency here, run into this one here, take out the sell stops here, and then start running higher again into the new week opening gap midpoint. It's consequent encroachment, but I call it the midpoint. It's all the same. So let's look at the daily chart and talk a little bit about what is happening there. So let's look at the 15-minute chart first. So today it's Tuesday, opened up yesterday here. Monday we had this run higher. I was looking for higher prices in London, and you can see we had higher prices, even went a lot more higher. So after taking out this high here, then we started to break down here, going into the New York session. Right there, we broke lower, had this crazy price action here. You can see a lot of wicks. There's a high resistance liquidity run, but you can see the bodies, they're trading lower. And then we finished up by closing on the low yesterday. So we opened up today, still keeping up with the lower prices, but I'm anticipating higher prices now that we've started moving higher. So in this 15-minute chart, I'm looking at relative equal highs, relative equal lows here. And it's interesting that we have relative equal lows here together with this low. And this can be a target for future price action now that we have that low and that low. You can see they are almost equal. You can see the lows here, they're almost equal with this one here. So we might dip again lower going into the New York session, but for now we're looking for momentum, and momentum is saying higher prices. So with that said, let's look at this 1 hour. So you can look at the 1 hour chart. Yesterday I talked about this Friday's high and this last week's Wednesday's high, and I wanted to see higher prices, but you can obviously see we did not run into those higher prices here even in yesterday's New York session. So we ran lower, and today we opened up at 0 GMT, traded below this yesterday's low. That is important, and then we started trading higher. So what are we? We are bullish still. Let's go to our daily chart now. I'm going to talk about the daily chart here. Let's move this back here while we are watching price. So you can see the daily chart here. Yesterday I talked about that 807.71 level. That is this level here. We opened up on Monday yesterday here after we closed up on Friday here with a huge candlestick here. So I talked about all this price action here, about that BC. We went in the midpoint of that BC, and then we came out of that BC and then started trading higher going into Friday, and then we closed high on the week. We've opened up this here. You can see the Monday high and Monday lows, very important levels, and you can see that new week opening gap right there. So we're trading right at that new week opening gap, like I've just said it, and now I'm expecting price trade higher. So this was a bit of a distraction, but we are bullish. We're looking at that efficiency here. We've opened actually with right now it's 752, so that 50 macro in the marketplace. We've just opened up here, and let's see where they'll push price. So I've talked about this here. I'm expecting lower prices. The best case scenario, I want to see it run these lows out and then start trade high. So below this inefficiency here, we would trade through that inefficiency here and start to keep lower prices. Then I'll be expecting these lows here to be taken out, especially this one here that started this move, this low here. That's significant. So that low is 702.59, so 700 level is right there. So from my experience, how we trade in this time period here, price does not really do much. It can run lower to take out an all low, just a mere all low, and then start trade higher. I mean, you can see from the previous price action here in Asia, we've been very bullish, and we started having this consolidation here from right away from this candlestick here, and that is 415 going into the end of Asia. Very crazy consolidation here. It wants to reach into the midpoint of that weak opening gap, but you can see it's just going higher and going lower, going higher, going lower. So we can expect price to behave the same going into this session here, early London. So what I noticed with this session here, it's normally consistent. There's 80% of the time there's normally a run higher from Asia going into this early London session. The previous momentum that is in Asia is the one that is usually going into this time period here. It's usually the same. So that's why I started talking about this session here. So you can see the momentum here. We're going to see what we have today. Does it have the ability to continue with this momentum here, on which I am positive that it will, or is it going to just turn the other way around and start trading lower? I mean, I've seen it around twice. There was last week on Monday, we were trading higher, and then it had a shift in that momentum, and then with this first macro here, it started trading lower, and it went a lot more lower into a new week opening gap this Monday here, this candlestick on the daily chart. And then I saw that thing on Friday with NFP. On Friday with NFP, we were having lower prices, and then price started trading higher, and it went a lot more higher. Something that I did not really expect. I call it a high resistance liquidity run, because I was talking about lower prices, but then eventually it started trading higher, and it went a lot more higher. So I've talked about, we have CPI this week. It's tomorrow. Today we do not really have any high impact news event. CPI is tomorrow, and we can expect something like that, but normally CPI is just a one way throughout the day. Normally it just goes higher throughout the day. So today we can still anticipate these higher prices. So we've ran more, we've touched the high of that inefficiency here. It does not really have an interest to start going through that inefficiency. You can see how it's behaving here. If you look at it here, avoid end up this inefficiency here. That's it. So drain into this high here, and then we've had this rejection here from 750, around 750 level. We've gone to 730s, and now we're trading at 726, 27, 28, around there. So yes, I talked about my entries. I talked about how I want to refine entries. So if I'm looking for a liquidity pool at a specific level, then I want to be in on an entry. I want to be in on an entry before 20 points away from that liquidity pool. So now we are talking about that level. That level is 746. So 746 is around 750, and below 750 we have 730. So that 20 points to 750, that's 730. And the top of that inefficiency, this low is 723. So the way price is behaving, I'm waiting for it to do something, and then maybe we can get an entry into this high here. So we're remaining with 2 minutes. I'm gonna close this 1 hour, and we're gonna see what the next hour has in store for this price action. So you can see how this 1 hour from these lows here, very huge candlestick here, started in the middle of Asia, ran higher, and then we've been trading higher. Then you can see these are still higher prices. Another thing, we've had a swing high here. It could be best if, with this movement lower here, it could be best if we had a swing low and then we start trading higher. But the way it's behaving here, I'm still expecting it to run through that inefficiency and trade into these lows first before we start trading higher. So I think I've talked much about what I'm expecting for price to do today. So we're gonna watch it, what is going to do in the next a few seconds. I'm gonna open up this new hour, and then I'm gonna see what is the trigger for price to proceed with higher prices or to start trading completely lower. So there we go, a new 1 hour candlestick. This retracement here, it can just be enough for price to start trading into again that 750 level. But for me, what I'm really expecting is not sufficient enough. It's really not sufficient enough. We can have price turn here and start trading, because you can see how it's respecting the high of that inefficiency. It does not really have an interest to trade into it. We can have an interest for price to start trading higher, just because of what price has been doing here. We've not been having very major retracement lower. Now the reason why I can just buy that 30 level and expect higher prices. But we've had this new 1 hour here coming to the marketplace. Retail traders can call this like a rejection, because we have these wicks. They can call it rejection, but I don't see that as a rejection. I'm seeing higher prices, because I'm using the bodies. The more the wicks, where the wicks are, price is gonna trade into that. Price is going to trade into that. So we're trading around that 730 level. I can expect a buy at that 730 and start trading higher into that 750 level. But if it could be best if it does what I've just talked about, the manipulation here, trade lower first, and then maybe we'll start trading higher. That's what I'm waiting for. I'm not going to buy that 730 level. I'm waiting for price to trade lower first, and then look for higher price. It could be very wrong if I jumped in on a buy at that 730 level, and then price just goes lower to 720s and 710s. And that's what I'm anticipating. So let's look at this 15-minute chart. Oh, this is EUS 30. What have I done? I've misplaced my 1 hour chart. I've misplaced my 1 hour chart for Nasdaq. So that's not bad at all. We're gonna take this Canadian dollar chart. Then we're gonna do that. So let's bring this here. But there we go. So I was looking at this a 15-minute fast. So if we look at this 15-minute chart here, you can see the bias is bullish. We had this one down close candle here and then start trading higher. Very small candlestick here, we went higher above that higher. Now we have this decline here again, and I can expect higher prices still. So I've talked about how price does not really have an interest to trade that inefficiency, but we're gonna wait for it now that it's trading lower. We've opened up here, tried to go higher. This candlestick's high is 732.84. Opened up at 726. We've had 6 points in that week. Now you can see it's going lower. So that 750 macro to H10. This is the last 5-minute candle with this macro. You can see that it has not done much. We opened up here. We've had a down close here, trying to trade into this inefficiency here, but you can see it does not really have that power to trade through it. This is the 755, very small up close candle, and we opened up this new hour, ran higher, and then we had price trade through the candlestick. And now we can expect momentum now that we've had this as an outside candle. So this was an inside candle, this is an outside candle welcome movement. So we can expect price in the next 1 to 2 candles. We can expect price to deliver either lower prices or start trading to that high here. So we've run lower, we've touched the open, we've barely touched the weak opening gap low. Let's see how it behaves. So we've gone through it. The low here is 718. So we've touched that 720 level. That's nice. That's nice. We can still keep up. We can still expect momentum to start trading higher. Now that price has not, it does not really have the ability to go through this inefficiency. You can expect it to start trading higher. So we've touched that new week opening up low. You can see the reaction there, up higher to 730s. So I'm now interested in that 730 level. I think I look for a buy around that 730 to keep up with the momentum and trade into that high here once more. Now that with this macro here, price does not really have an interest to trade through that inefficiency. So we are up there at 730s, 732. So that reaction from that new week opening gap low, it's kind of like a trigger to go into the marketplace and buy that 730 level and expect price to trade back up into 750, because we've had a nice retracement lower here. Now that it suits with what price action have been doing, that's a nice run high. So looking at 734 now. Anybody who bought 730 is their 4 points high. So I talked about this initial buy side here. That high is 746. So the best case to be buying, if you might be getting out at 746, 20 points down is 726. So 726 is around here. You can see that 726 is here. So wanna be bullish, that 726 buy is nice, so that you can expect higher prices to trade into that 746 level and 750s. So you can see this candlestick here has closed at 732.84. That's interesting. So we trade back into lower into 730, 727, between 725 and 730s. Then I'll be buying it to expect higher prices. Oh, there is neighbor of mine who wakes up with loud music, and then they're just disturbing. Let's look at a 1 minute chart here briefly. Now that we've had this run higher here, it would be best if we come back into this between 730 and 726 right there. This is my buying area. So you can see it's picking up with the higher prices. 732 now. So um, the initial narrative that I was expecting is, I was expecting price to, with this macro here, I was expecting price to run through that inefficiency here and start running into these lows, but you can obviously see we did not do that. So something that I was expecting has not happened. So I'm gonna go with what price is offering me, and you can see opened up here with that 750 macro. Had the close candlestick here, I was really thinking that we're gonna run through that inefficiency and run into these lows, but you can see it not done really what I was expecting. We've had support on top of that inefficiency here, not and this week here with this 805 candlestick here, opened up trading to that new week open gap low, and you can see the bullishness here. So this here is the trigger. This is the trigger for higher prices. It's a nice reaction. With the fact that we've not traded through that inefficiency, with the fact that we had press line into that new opening gap low, and then we have this here, that's the trigger for higher prices, and I'm expecting to buy it between 726 and 730. That's a buying area. So far we've not retraced back into that price. So I'm still waiting for it, but if it goes, that will just be what price does. So we're back up at 730, 735. So 736, 737, we touched 737. And even if we bought at 720s, 740s around the corner, create a nice reaching to that level. Boom, 739, 739 there. Boom, 740, 741, and you can see the bullishness. It's beautiful. 740s. So we can expect that 746 level to be traded once more, and most probably you can see that small wick. I can expect price to trade through it, but the midpoint of that new wick opening gap, we must touch that. That is 744. Now that we've had that reaction from that new wick opening gap low, that midpoint of that new wick opening gap, that's where we are headed. So it's very good to take advantage of this very small movements in price action. The wild movements in price action in New York session, I just couldn't handle them. And I've blown lots of accounts trying to trade that move in New York. So now that we've had this here, the best I still expect that retracement, but it can still go higher and take that high. So we've opened up a new 15-minute candlestick, and you can see where it closed on this 15-minute chart. Close, so close to that high. That's really interesting. So we're trading low with this new 5-minute candlestick here that has just opened. So one thing here, we've not gone above this high. That's really interesting. So anybody who could have been long at that 730 level, we've not reached into 750. They're still expecting higher prices, right? or anybody who can be long at 720 still expecting higher prices. Now that we've had this reaction here, we can have a retracement lower still. So we're back down at 732. You can see how it's running lower. Before we move higher, this is that move that moves everyone from being right on momentum, and then it will start trade higher. So that's a huge move. We'll see whether we go below this efficiency here. I'm not going ahead and buying this directly. I want to see it run below that or here, and then we're gonna buy it. See that? So that's 718. I'm gonna take a stab at that long. Now that we've ran these lows here, this is the kind of manipulation that I was expecting in the first place. So I'm gonna buy that 80 level. That's around 720s, and then expect price start trading higher. So with this move lower here, I can call it like it has come late, but I still expect it to be to my advantage. We've gone back into this inefficiency. Look at where we've closed. That's interesting. One thing it has done, we've run below this low here. Before we opened up with this macro here, I was expecting price to run lower through this whole price action here and run into this relative equal lows here. But it never did. We had this support here, traded higher, but we never reached into that level there. So I was still expecting some kind of manipulation. I know that we've had this run over here. What I'm thinking is everybody is looking at this run here and expecting it to run a lot more lower to chase it. But it's a very steady move lower, and you can see I've bought that 718 level, but you can see the movement lower. We're trading at 708 now. Those are 10 points, 10-point drawdown. But now that we've had this here, I've called this momentum as bullish. I'm still expecting it to start running higher. So now that we've had this move here, and now it's sticking low with this low pricing here, I can look at this here and call them relative colors here and sell it, especially this low here. I talk about this low. Maybe it wants to run this low out and then we'll resume with higher prices. That's what I was expecting at first. Right there. So we've ran from 740s to 710 very fast. So let's see whether they would take this low out here that are 702, or we'll just start trading higher from this level here. Now that we've gone below this low and these ones here, the way it's reacting here, the way it's behaving, I want to see it run into these lows here first. So I bought that 718 level expecting it to find support on this inefficiency here, but you can see we've gone through that inefficiency and we've closed on this low. So that's not really what I could anticipate price to do. So my interest is looking at this inefficiency and how price behaves with the closure of this candlestick here. We still have 2 minutes and you can see it's still pressing lower. The low of this candlestick here is 704. I can still expect it to run through that inefficiency. Now that we have sell side here together with this inefficiency, I can expect price to run into that. So honestly speaking, this end here is not really like pleasing to me with what price is doing right now. It's not really pleasing, but I can still anticipate this new candlestick here that's gonna open in less than a few seconds here. We're gonna see what it does. But what I wanna see is I wanna see it run this low out and trade it with this inefficiency. And you remember that limit order that I had here? That's the buy. So we're back down to 704. So what I'm gonna do, I'm gonna exit on this trade here now that we've opened up right there. We're at 701. I'm gonna exit there and I'm gonna be looking for a new long. But look at this reaction here. So we've closed right there, opened up, very small wick, and is pressing higher, 708 now. So now that we've touched that low here, I can expect higher prices. We've not like gone through it. I can expect a retracement a little bit and then start trading this inefficiency. So I'm interested next in that low. There we go. So my initial expectation was with this macro here, run lower, take up these lows here, and then start to trade higher. I've not really had that trade in regards to that, but now that we've had this move here higher, these two candlestick here from 705 to 710 had this run higher. This movement lower was the kind of manipulation that I'm expecting. So from where it's trading right now, if it does not start to trade higher, go back into this inefficiency, then I'm gonna exit on this trade here. So far this low is 700.89. If I were to be precise at 720, then that could be a 20-point drawdown. So if I were not to be in on this trade here, I could still be anticipating price to run into this inefficiency here and then look for a buy around that 690, or if it gets back to 700 level, look for a buy at 700. Now that we have that buy at 720 is there, we can still anticipate price to start trading higher. So in previous price action, I've seen where price does not trade into liquidity pools, but this is just so obvious, and I can anticipate it to trade into this. And with the fact that we had this target traded into, that's why I was really anticipating this run into these lows. So that can stick us 2 minutes. You can see it's still pressing lower. So I think that's really it. We're gonna exit that trade. Let's look at this 1 minute, how it's behaving. And you can see how it dropped lower. And I was looking for a buy around that 726 to 730 level. And we've had this huge drop lower. So best case scenario I wanna see is, does it have the ability to start trading higher, or does it want to go into these relative lows here? So we've closed that candlestick there, and you can see what's it doing, still trading into that. So that's really it. That's a 20 points drawdown there. And look at the way it has touched it, and look at the way it's reacting there. So we've touched that low. So let's see whether we'll start trade higher. So that can be really be enough. So if I was not to be in this trade, if I were not in this trade here, that 700 level could be my buy. So we've touched this low here. So if we're really bullish, and price does not really have an interest with this inefficiency, it will just want to trade higher, and this was manipulation, then I'm expecting it to start trade higher. And you can see what's it doing here. So this is complete weakness. So those are a lot of points from where I bought it, so I'm gonna exit that trade on a loss. So initially I had my limit at 690s, and I was expecting price to run into through these lows here. So that 690 was my limit order to buy. So that could be an entry right there at 690. Now that we've had this kind of price action here, we've then with this efficiency here. So I'm looking to see what price wants to do with this efficiency. Does it find support on the midpoint of that inefficiency and then start trading back in this new week opening gap, or does it just go through it and then try to trade into this inside this range? So look at this 15-minute. We've had this drop. We're heading back into this inefficiency in the 15-minute, and it's the same one with the 5-minute. So going with my initial look at price action, we've had this drop here. I bought it right here just because I thought that we've had this movement higher. Price is trying to respect that inefficiency, and I'm expecting to trade back into that new week opening gap and even higher. But you can see we went through it right there, and we've ran fast into this relative equal lows here, and we ran into this efficiency. So now that we are bullish, I'm still looking for higher prices, and those higher prices are going to be seen by what we do with this inefficiency. Do we find support on this base here and start to trade higher, or do we just go through it with the bodies and start reaching low into these lows here and into this inefficiency and this low? But what I'm predicting is we're trading higher. I want to see higher prices. So we're trading at 694 now. That's 697, and I want to be interested in buying that 690 or 700 level, especially that 700 level. If we have very interesting higher prices, then I'm going to be buying that 700. So I've talked about these weeks here, the way price behaves around these weeks. We are remaining with a few seconds, and we're gonna open up the new 5-minute candlestick. So we're gonna be seeing what it does when it opens up. We're trading at 703 now. That's a nice run higher. So if I were to be buying at that 690 level together with the idea of that limit that I removed here, then it would be 14 points higher. So that's a nice reaction from that inefficiency now that we've taken this sell side. So if it gets back down to 700, I'm going to be buying it. So I'm going to be buying it in market. So we have two PD arrays here. Run lower into this candlestick's low is 786.57. Look at that run back into 715, 720. This candlestick's low is 680, 686, and look at the low. Exactly the midpoint of this inefficiency here. And look at where we've closed our inefficiency. It's beautiful, right? So that 690 buy was a nice, could be a nice buy. Go below into that 690. Look at that run higher. It's nice. So another thing to learn today, it's not really a nice idea to be trading in front of this manipulation act here, because you do not really know what it's gonna be reaching for. So my interest again is, are we going through this inefficiency here once again and start trading to these highs, or what does price has an interest in? Or how do we react with this inefficiency here now that we've gone through this one here? Look at the midpoint here, and we start trading higher. So we've lost here a couple of points from right there to right there, and it's so weird that where I was exiting is exactly the turning point, and it's trading right back up, right? I've seen this kind of price behavior a lot. So I'm gonna be looking at, when we close this candlestick here, what interest does price has, and honestly I'm looking for the higher prices. So you can look at this 1 minute how it's behaving. You can see the run lower here, and then we have this retracement back up into this inefficiency. So now that we've had this, all of this price action, my bias is still bullish. Still, I'm looking for higher prices. I don't want to be selling it. I predicted this kind of price behavior here. It's just that it came later in on from where I was looking it for. I was expecting this move here to happen with the macro, but it just happened to run higher first and then dip it lower below these lows here. So you can see where we closed in regards to that inefficiency, and I'm still looking for higher prices. So if we trade back into 700, like I've said it, I'm going to be looking for a buy, then I'm expecting higher price. So if I were to be really trading with my more money, or to be really sure of what price is going to do, I could be waiting for it to start trading into this inefficiency here, then buy it. I mean, that's what I should be doing. I should be waiting for it to trade into this inefficiency here, trade into the upper half of this new week opening gap here, and then be interested in buying it. But now that we've had this here, and I predicted this before, I want to be jumping in around that 700 level and then anticipating higher pricing. So another thing, we're getting into London. We're remaining with a few minutes, and then we're gonna see what that London Open does. And that London Open, honestly, we can have a price trade into this inefficiency here once more and start trading lower. It can't do that. It can do that. And if it does that, if I go in on a trade at 700, then I'll be wrong. So we're trading right there at 710. So we're back down at 706. Right there at 710 again. So if it starts trading directly right back up into this inefficiency here, then I've said I'll be looking for a buy around that 720 again. If we trade back into 700, that 700 is around right there. See where it is. So I'll be buying that 700 level. We barely touched it. There we go. So buy 700 and anticipate higher prices. So with this kind of price action here, you want to be reminding yourself what's the bias, what do you believe in, what price is gonna do. Now that we have a few minutes, and then this macro that welcomes in the London Open is gonna do. I talked about these two inefficiencies here while we were trading at the right there at the 30 minutes past the open, and it was 36 minutes past the open. And I talked about how I wanted to see price reach into these inefficiencies here, not these inefficiencies, but these highs, and we reached into that high there. This in itself, it's to me with my past experience with reading price action, this is a red flag with this momentum going higher. One thing it has done, we've traded into the midpoint of this new week opening gap. We've traded into that buy side. So price price can have no interest in trading into these highs here again, because we've taken that high out. I mean, that's enough to push prices lower. So I talked about that. I talked about how I wanted to see it keep lower prices. I talked about how I wanted to see it go through this inefficiency, but now that we had this price here open up, trade into the new week opening gap low and start trading higher, then I was so I said this is the trigger for higher prices. Now that we had not run through this inefficiency, and then price trade went lower, and I bought that 720 level. I was expecting to start running higher right from after I did that, but we went lower, and we went through this sell side, just like I had said it will do after we ran this high out. So we ran through it, and we ran into this sell side here with the week. So my interest now is, how do we behave with this inefficiency here? And I said I wanted to see it run to the upper level of this inefficiency, then we'll be looking for buys. But I've jumped in on another buy at 700, and you can see it's trading low into this inefficiency. So price can do one or two things with this inefficiency. We can trade through it and stay lower with this inefficiency. But now that we've had this bullishness from Asia, I was expecting price to start running higher. That's why I bought that 700 to expect the higher prices. So we're gonna be trading that 850 macro, and then we're gonna see what interest does it have. So we've gone through that week there, but I'm interested in where this candlestick here closes in the next few seconds. So we bought that 700, we're 10 points down. If it's really weak, then we'll have to go through that inefficiency completely and close outside that inefficiency. So we've run into the low of that week. And there we go. Look at how we've closed. So if we go still lower, we continue with the weaker prices and then trade outside that inefficiency, then that will be it with that 700 buy. But if we find support on the upper half of this inefficiency, that's what I'm waiting to see what price does. Then we might have a continuation run higher. Well, so far these are a nice reaction from that inefficiency acting as an inversion. We were expecting it to support price right here, and now that it had achieved these targets here, you can clearly see that here it's acting as inversion. It offered higher prices, but now it's offering lower prices. So that 850 is in the marketplace, and you can see we are devouring the lower portion of that BC there. So you can see the 1 hour, the weakness from yesterday is a continuation to the weakness with today's price action. So we're again 20 points down with this buy at 700. We've traded outside that inefficiency there. Something that I would not really anticipate to see. So what I'm waiting for this candlestick to do is, where do we close with this candlestick, and then that is going to be it for today's prediction of price. So one thing today has done, we've not really had the bullish momentum here from Asia. It has not been a continuation of bullishness into this midnight New York Open. Normally, it's a very easy movement, it's a very easy continuation in price. But after we did this here, now it has the opportunity to make a deeper retracement, and you can see we've gone below these relative equal lows here, and now we are pursuing into this inefficiency here that I outlined. Well, this is not easy after all. I don't call this easy, honestly speaking. This is it's difficult when it gets disappointing like this here. It then becomes difficult. When momentum does not work, it's difficult. So this is the first 850 candlestick we've opened up right there. We've made a reference to that C below, and just keeping up with the lower prices. Now we're trading at 680. I wanted to see it open up and start trade higher, but you can see it's not really doing what I was expecting it to do. So what this candlestick here can do, we can close on the low of that inefficiency and then start to trade higher. That's the last card that I'm expecting price to do with this kind of price action here. If it does not do that, then we're going to be experiencing lower prices. We're going to be taking out this low out, and then maybe trade into this low here. So look at what we've closed, and we've opened up this new candlestick. Is lower, still inside this inefficiency here. When momentum does not display itself in this kind of environment here, honestly, it's really disappointing. That's just my honest opinion, because most of the time it's what it does, but we must also anticipate this kind of know how to anticipate this kind of price action. And what has it done? We ran into that high there with the wick. It's not really enough with the wick. That's why I'm still anticipating for it to trade higher. It's not really enough. But now that we had this here, price had the opportunity to start a deeper retracement. And that deeper retracement, we've had it here. Into these lows here, very huge wick here. I talked about how I did not really want to see price trading to that wick. Then we started trading higher, made reference to that inefficiency, and then we've had this decline lower here. So I want to see it start to trade higher now that we've traded into the low of that inefficiency. If the momentum is still bullish, then we want to see higher prices. That is to go together with my original idea of buying it around that 690 level. So we're remaining with 3 minutes, and then we're gonna have London open. So let's wait and watch price on wherever it's going to do with the London open. As I'm watching this price action, I'm really asking myself if I could have waited for my original idea to buy at 690. Could I have really been buying it right there at 690 while it was trading lower? Honestly, no. I talked about something while we were trading here. I said if I were to be trading a real account or a serious account, this is a demo account. I'm trying to still see if this works here and how does price behave with whatever I'm trying to do. I could have been anticipating for price to trade into this inefficiency here and trade above it, then we could be looking for those higher prices. But now that with the fact that it has traded back into this inefficiency here and we're trading on the lower portion of that inefficiency, then to me this is weakness. The bodies have not gone outside that inefficiency, but I'm really thinking they're gonna be doing that soon. So we've opened up London. That's the first candlestick with London open. So let's see whether they will proceed this London open with these higher prices, or will just have weakness and trade into this low here, and even this inefficiency here with this whole price move here. But I'm expecting one thing. I'm expecting it to start trade in higher. So if I could have had my earlier buy around that 690 level, the drawdown so far could be in this candlestick here that has opened up right now in London, and the low of this candlestick is 675. So from 690 675, those are 15 points out of a drawdown. I'm still expecting higher prices. So if you could have not have gotten that buy right there, because this candlestick happened so fast, then right now we're gonna see whether if it could have been trading lower here by that 690 level, then let's see where price will trade to. So we've opened up, taken out this very small lows here, and you can see the movement higher here. So the best that I'm expecting out of this price action here is to trade back into this new week opening gap, and especially this midpoint here, and maybe reach into that high. And with that 700 buy, we've had a drawdown of up to 675. So from 700 to 675, those are 25 points worth of a drawdown. Just wow, right? Initially here from around 720s, I could not really have been anticipating the whole of that price move lower in regards to that move here, this manipulation move here. Now that is going to run sell side and then start trade higher. I could not have been patient enough to wait for price to trade from 720s, around 718s to 675. Those are a lot of points. That is 45 points worth of a drawdown, and that's just not really my. I'm not really patient enough to be waiting for that. Immediately price goes into 20, 30, 25 to 30 points. That's really it. What of a drawdown? That's why I've been anticipating for price to still start trade higher, and I've been able to patiently wait for that decline there. And I talked about if we have price remain on the lower portion of that inefficiency and then start trading to this here, then that will be it. But right now, now that we have had this move here, I'm anticipating price to start trading into that new week opening gap. Now that we had this move here with the week, I want to see trade into that midpoint of that new opening gap and even higher. So I talked about these inefficiency here. I talked about how I wanted to see it trade into the higher end of this inefficiency, then we'll be bullish, and that's what is coming in here in London. So we've opened up London here. Let's see whether they will keep it with these higher prices that it's offering here, or it will just have this candlestick here and then start to trade lower. I mean, can also do that. And if it start to do that and then we go below this low here, then I'll be out of that trade. So right now we're back up to 700. Now, what I want to see is if we're going to be trading higher, I want to see price spending a lot of spend not a lot of time, but I want to see price not spending a lot of time on this inefficiency here. Just maybe touch it, maybe trade on the upper half of this inefficiency and then start to move higher if we're going to be going higher. And if I were to be that buy at 690, 20 points is 710. We've not reached into 710. This candlestick high is 704. But the way it's behaving here, we're going to see it reach into that. So my interest, again, another interesting point in price action is the midpoint of this week. Now that we've gone through it, here we came back into it. It was a premium array, but we've gone above it, and now it's acting as a point of support. So that midweek is right there. So that is 694.45. This candlestick's low is 693, just 1 point below that price point, that midpoint of that week there. So let's say if price overruns the whole of this manipulation move here, where is it going to reach into if we're really bullish? I normally take my fib and run through this whole move from where it started right there to this low, this here to this here. So the high, that's the first standard deviation of this move. Actually, it's not the first standard deviation, it's half of the first standard deviation. The first standard deviation is right there. So that move projected into that high, if we run through it, that's gonna act like a pivot point. It's gonna go through it and it's gonna offer a range that is more like that manipulation move there. Or you can take that and then put it on top of that high here, and you can see the fast scaling is together with that bicep from that high of yesterday's New York session. So you can have price reach into that. You can see that. So if I were to be buying that 690 again, 700 and then 710, we're so close to 710. But now my buy is at 700, and I'm anticipating higher prices together with this manipulation move here. We move below these lows here, but the bias is bullish. So I'm expecting price to start getting back into this inefficiency that I highlighted before, and then most importantly trade into this midpoint of this new week opening gap. So not forgetting what time we are in right now. We're in London. We just opened up London right here. And we've gone outside this inefficiency here. Look at the bodies closed inside that inefficiency. And we're trading higher. We opened up this candlestick here, made reference into that inefficiency, and then start trading higher. So I want to see this inefficiency here be a draw on price, and then we're going to trade into this high. So from this trade that I had at 720 is around 718 level. Let's look at that. So we're going to be looking at today. That right there. This was from 718, and then I exited at 689. So from 689 to 718, this is we take this calculator out and then start looking at how many points these are. 689. I'm gonna be disregarding these points. I mean, they are important, but let's look at what we have here. Minus 718. It's gonna be a negative, but that is 29 points. 29 points. So that is the drawdown on this buy here that I had at 718. That's around 720 level. Went through it and then I exited down here. So while we're trading here, my bias is still bullish. I've not changed bias, and I'm still expecting higher prices. So I bought again this 700 while we're trading here, and I've waited for the price to do all this here, and I'm waiting for it to go into 720s and probably trade into this high here, and this midpoint of this week opening gap is the drawn liquidity. Now that we had this very minimal run through that high here, and then we started having this decline, so I want to see it go into that new week opening gap once again. If I were to be again that buyer at 690s, remember we've gone into 710s. That's nice, right? The first one was here, the second one here, and with a very minimal draw of 15 points. This is interesting. So we've touched that inefficiency here. So I said that we used this inefficiency here to act as inversion, and then we had this run lower once more into this inefficiency. But you can see price has gone outside that inefficiency, and then we've traded back into that inefficiency. So the thing that I want to see price do is I want to see it trade back into this inefficiency and then find support on top of this inefficiency. And I talked about how I wanted to see price. If it goes and finds support on this inefficiency, then I'll be interested in being a buyer. But then I bought it back here at 700. So this video is going to be a little bit longer today. We're looking at hurdles in price action. So we've made this run here up to this candlestick high is 715.33. Those are 15 points from 700. So let's see whether does it have a decline from that inefficiency here and maybe trade back into this inefficiency, or do we just go straight up higher and be the bullish bias that I talked about. So I love the way this 15 candlestick here has behaved. We moved higher here, run lower, and then I want to see it run higher. So this low here is sell side drain out. Let me annotate it as I'm looking at this. And that's silver. So sell side out, I'm expecting higher prices. So we're back down again to 700. Let's see whether it will touch that inefficiency and how much time is it willing to spend inside this inefficiency. So most of the time price, if it wants to make a down close candle of it, or if it wants to go lower, most of the times it makes it daily highs and lows in London. I mean, that's just a basic tool that ICT released into the trading community, and if you backtest it, most of the time is correct. Most of the time price makes its highs and lows in London, so that's what I expect. Sometimes it makes the highs and lows in Asia. That's when we have a very nice momentum price move. Just if it wants to go higher, it goes higher throughout the London session and goes into the New York session where it has some form of manipulation and then just goes a lot more higher if it wants to go. That's if we are bullish. If we are bearish again, it can make a run higher from Asia, just like this one here, make a high, and then that's gonna be the high of the day. And then if I'm completely wrong, then we'll be coming out today or tomorrow, and then we're gonna be looking at where the highs and low form of this daily range. So what I'm saying is I can be entirely wrong. So we've gone back into this inefficiency here, we've touched it, still acting as inversion, and you can see the movement here. I talked about how I wanted to see price if it were to move below these lows here, then this is way so much opposite of what I'm expecting. And look at what it has done. We've traded higher. This candlestick high is 715 inversion right there. We've touched this in this gap here that I outlined, that it's on the low of that new week opening gap, and then now we've had price decline here. So I call this out here. I say that if we go below these lows here, then that is really it for me. And then we're gonna call this a session and a loss. So we've gone higher. I was expecting price to find support on the upper portion of this inefficiency, but it's not doing so. And what is it doing? We're running still below this low. So I think that's really it. We're gonna be exiting that trade. We are entirely wrong today with the bullish prices that have been anticipating in price, and sometimes it can do that. So I'm not going to be anticipating a lot more of this price action. So until tomorrow, adios.